Welcome to Smith Weekly Discussions, an occasional program for our readers and listeners of Smith Weekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at Smith Weekly, including Dale H., at IamMPrim, and Peter S. We've got Alex Holmes returning to the show today. Alex is CEO and director of Plateau Energy Metals, a lithium uranium development company advancing the Falciani and Macusani projects in southern Peru. The company is listed on the Toronto Venture Exchange under the symbol PLU and also on the US OTC markets under the symbol PLU. UF. Alex, welcome back to the show.
Thank you, Andrew.
Well, Alex, update us on the sectors both for lithium and uranium, and what is your outlook for 2020 here?
Well, let's start with lithium first. 2019 was a tough year for all lithium-related equities, largely driven by uptake on the demand side, not really keeping pace with the supply coming on, and I think a lot of that related to just really early days of the electrification of mobility. And that's pretty natural, but I think what hasn't changed is that if you look downstream of the providers of lithium chemicals, the raw material providers, the mines, the car manufacturers are investing about $350 billion over the next 5 to 10 years in electrifying their models. And then if you go upstream of them to the people that are actually making batteries, we've nearly doubled the number of battery plants to over 103, I think it is now, maybe it's 104, planned from now till 2028. And I think it's really important to put in perspective that in 2015 we had 3 in the world. So there's about 120, 130 billion being committed to battery plants. So they're all going to need the raw materials, and at some point we're going to hit an inflection point. And I think that over the last 6 months, because we've had some major price pressure on lithium chemicals, but also the spodumene concentrate products out of Australia, that expansion plans have been put on hold, and there's definitely been some production curtailed, and in some cases some spodumene concentrate projects shut down. So I think the kind of forecast gap by some third parties out there was around 2025 when supply just wouldn't keep pace. I think that's been brought forward by potentially even a couple of years. So I think that really starts to demonstrate that we're in this long-term secular trend and we're oscillating around, the lows and the highs on that path. So that's kind of our view on the lithium market. And I think for 2020, the first half of the year may still be a little bit tough, but I think that we get through trade war. I think things look a little more optimistic in China, and Europe is really coming forward as I think, kind of that second wave of electric vehicles. And the rubber will start to hit the road, and I think we'll see more optimism and sentiment shift, and that'll directly reflect in the equities coming into the middle of this year, the back half of 2020. And in the meantime, until we get to there, I think I would just watch for signs of watch the big producers and how they're communicating, because they're still long-term committed. So that's lithium, and then on the uranium side, I think we all thought that we would have had a bit of a pickup in the uranium sentiment. We had spot prices come back a little bit after running quite strong in 2018 and then falling off again. It's come back in the spot market a bit. I don't think we've seen a lot of big contracts signed on the long-term basis. What we're hearing from the big producers is that the utilities want them to develop tier 1 assets, but for them to expand production or restart, mines that are on care and maintenance, they need much higher prices. So I think the conversation, or I can only imagine the conversation happening at this stage is, look, we're not making money at the spot price. Our term contracts are coming off over the next little while. From the producer's perspective, we're very much in the driver's seat here. And if you want us to bring on tier 1 assets, or expand current tier one assets, this is the price we need, and the price is a lot higher than term contracts, which I think are sitting around $32, $33 today. I think it'll be really interesting to see how contracting conversations evolve over the first part of 2020, and if we see some things and the trend on that contract price trending, more towards 40, then I think that's a really positive signal for the uranium developers and explorers, and that sentiment will will shift. And I think, speaking to the past, what we've seen in the past is when the sentiment shifts on the uranium tape, the equities, respond very, very well and very quickly. So I think 2020 should be this kind of turning point year. We did see a new uranium royalty company IPO recently, related to Uranium Energy Corp, and they had a very successful IPO, oversubscribed. So that's a pretty bullish signal as well, I think, for the capital looking for exposure to uranium.
Well, as you know, investors have been cautious with both South and Central America coming off events in Chile, Bolivia, Argentina, Nicaragua, and of course with the Venezuela debacle. How are things in Peru, Alex? And what are your thoughts on these recent events throughout these countries?
That's a good question. So Peru is recently, and it was probably about 2 months ago, the president of the country dissolved Congress. So it has a permanent Congress right now. It doesn't have a regular sitting Congress. That means that everything that happens is effectively passed by presidential decree. When that happened about 2 months ago, all of the ministers, a new cabinet was formed. All the ministers were replaced of all the different ministries. That kind of volatility is not something you like to see politically in any country. However, Peru has been through, it's got quite a long history of political volatility, if you will. And during all of that volatility, the country continues to grow. It's got a very strong U.S. currency reserves. The currency is stable. So while government seems to slow down and progress at the government level slows down, the country economically is still able to perform. So I think in Peru, you still have a very business-friendly climate. When Congress was dissolved, there was some protests on the street, but it didn't really get extremely violent, and there wasn't much in the way of looting and ransacking like you might expect in some other countries. And I think I think some of the other countries in South America are very challenged right now. I look at Chile, and constitutional changes and things like this are going to it's going to become more and more challenging for natural resource projects, especially in areas where hot button topics like water scarcity are a focus point of kind of the cause of some of this unrest. And Argentina going through a political change at the government level, party change. I think we're seeing currency controls, and look, I'm no Argentinian expert, but I think it certainly presents a more challenging situation for foreign capital looking to invest in Argentina. So when I look around South America, I think Peru, despite the shortcomings that I've already talked about, I think is a very strong position. About 65% of their exports are commodity related or natural resource related. Foreign investment is a big thing there. We have definitely seen some social unrest at natural resource projects over the last year or so in Peru, and in a number of cases, a lot of that driven by the agricultural sector, the impact on agriculture. And these are things that are very important. That social risk management and CSR efforts are critical to any project moving forward. So I think in Peru we have a congressional election coming up in early 2020 and a presidential election in 2021. I think President Vizcarra did what he did partially as a result of not having many seats in Congress, and he was looking to get things done. So that's sort of a background on Peru, and I think just generally around South America. It's Peru is one of the better places to be for a variety of reasons I mentioned.
And Alex, can you speak to the local, a little more on the local side? What's the status of the governorship in your region where the projects exist? Can you speak to the status there and anything you'd like to highlight?
Sure, yeah. So I'm trying to remember when we last spoke, I think it was early days of the new governor, Walter Adiveri, coming in. And there was a lot of skepticism around what his agenda would be. Being a governor for the first time and in politics for the first time, and having a past that was connected to certainly civil unrest. So Walter Adiveri is currently in jail. He was arrested as it relates to an ongoing case that was still open to the civil unrest that he was accused of being a leader of in 2011, and it's quite possible that he gets out of jail on appeal. In the meantime, the Vice Governor Augusto, is effectively running the show on Mr. Adiveri's behalf. For us, we spent a lot of time, our team on the ground, getting to better understand Walter Adiveri. His brother is actually a chemical engineer working in the mining space, and so that was a great avenue for us to, talk about lithium in Puno and our uranium project in Puno. And it's a project that is really an industrial complex, and this is not something where you can send in a whole bunch of artisanal miners and try to extract lithium, because you can't do that. It's a highly specialized chemical process, and through that, those conversations with Mr. Adiveri and his team, we got a much better appreciation of what matters to them. And I know he visited the communities in our area and got a sense of how we were as being good corporate citizens in our host communities. So funnily enough, despite people sort of really focusing in on him being a key risk for any projects in the region, we managed to strike up a strong relationship. That's the current status of the governorship in the region. And then Vice Governor Augusto, who's hasn't stepped in as with the governor title at this point. He's actually from a different party. He's Quechua instead of Aymara, which when I'm talking about Quechua and Aymara, that's the indigenous side of the cultural side. And we've known him for quite a number of years. He's much more, call it PR friendly, supportive of mining, as opposed to Mr. Adiveri. There was certainly some concerns around anything he said publicly as it relates to natural resource development. But at the end of the day, like I said, we found a way to communicate well with him and his party, and recognize that the big things we're doing in the communities are exactly what he would like to see for companies operating in the region. And respecting culture and the environment are key factors.
Well, I appreciate the update on that, Alex. Let's get into some further administrative matters. What is the status of the concessions dispute, and how long do you see this taking to be resolved?
Sure. So I'm assuming everybody listening knows the background. Something that started in 2018, middle of 2018, and really only came to light sort of July, August as being problematic for us. We have 32 concessions of a total concession package of 151. Those 32 concessions are more or less random throughout our project area. However, some of them impact some of our uranium resource, and one of them impacts our lithium resource. And it all revolves around a claim by the geologic administrative party, or group, I should say, that we were late on payments in 2018, when in fact we weren't, and it's more the administrative booking of deposits and applying them to concessions that this geologic group that claims we were late on. So anyways, we went through the administratively heavy process for a few months, and the outcome of that was an arbitration panel determined that we didn't deliver the payments during the opening hours of the Geologic Administrative Group. And so what we've since done since that outcome, because it's clear that they did not take into account the general mining law or the fact that the funds were in the Geologic Admins group and that the receipts were delivered within the time frame allowed by the law, we had to resort to a dual track process. So the second track on that process is a judicial process, which is under administrative law, and we are pursuing that to protect the assets of our stakeholders. We are going through a process to file injunctions and then to pursue a judicial path. At the same time, the administrative path remains open and can stay open for a period of 2 years post that arbitration panel's decision. And why I think that administrative path is important is because at any time that mining council can auto change their opinion, it's called, and effectively reverse their opinion based on consideration of the events. So on the administrative side, we continue to work with the Ministry of Energy and Mines, and unfortunately we had hit a speed bump when Congress was dissolved. There was a new mines minister appointed. So we made a lot of progress with the previous mines minister, and now we're focused on working with the current mines minister. He's only been in the hot seat for probably about 7-8 weeks now. So as you can imagine, he's got a lot of things on his list of things to do. We're one of them. And on the judicial path, focusing on getting to injunctions first. What that effectively would do is freeze time, reverse what's happened until a judicial path is seen through. And a judicial path could take anywhere from 12 months to 3-4 years. In the meantime, what that does is all the concessions stay in our name, and we continue to work on them if we want, pay the good standing fees. I think why that's important is because it freezes them from being able to go anywhere to anyone else or up for auction. And in the meantime, what we'll do is continue to focus on the assets we do have, because I think what the market has forgotten is that we still have a very large lithium resource. We still have a very large uranium resource without those concessions, and there's a lot of work we can do to advance certainly our lithium project with call it a smaller case scenario. But when I say smaller, I'm still referring to quite a significant project.
Very well, Alex. I appreciate the information. Can you speak to two other things on this topic? Can you speak to the legal team that you've employed to pursue this process? How confident are you of their ability to deliver in the company's favor? And then secondly, this dispute, can you give us just a ballpark figure about how much this dispute was over? Are we talking a couple $100,000? Are we talking about $1 million? What's the bottom line cost arising out of this dispute? What was it over in terms of cost?
In 2000, this is all in our public record, but in 2017, a couple of auditors, independent auditors, reviewed concessions all over the country and determined whether companies had been underspent on those concessions in accordance with, as concessions age, they're required to spend capital on those concessions. And we were initially issued a penalty of $2.7 million US on our concessions, which was completely wrong. And because we've invested a lot of capital in that whole in the plateau, if you will, over quite a number of years. And so we ended this process of discussion, negotiation, providing backup documentation, etc., to show where the auditing firm was wrong. And I think that penalty went from 2.7 to 2.1 to 1.8 to 1.1. And basically where we landed, unfortunately quite late in June, which is near the time when concession payments are due, the Ministry of Energy and Mines and the tax authority agreed we had actually overspent on these 32 concessions. So the 500,000 US penalty was not something that needed to be paid. And on the other ones, we hadn't overspent and we had a penalty. So on the ones we agreed to, we had a penalty. That amount was determined at just over $500,000. We paid that. And on the 32, they said, yeah, we will issue you what is called it's effectively called a non-penalty resolution. So something that notifies Ingamet, an official document that says on these 32 concessions, the company has no penalty to pay. Unfortunately, that document, in the way it works itself through the bureaucracy of the system, while there was an agreement in principle on the 25th of June, on the 27th of June, the recommendation from MINAM went from the General Director of Promotion, Mineral Promotion, to the Director General's desk. That was the Thursday, and the payments were due on the Monday, the 2nd, July 2nd. It sat on his desk for Friday, and on July 2nd, Monday, he issued a resolution, which was delivered to us just after 4 p.m. on July 2nd. Until that resolution is issued, the bank, the National Bank, which has the bank account for Ingamet, has digital records of every concession. And until that non-penalty resolution is delivered, the bank can't accept payment from us for anything other than the good standing fees plus the penalty, the $500,000. Once they had the non-penalty resolution, they could accept payment from us just for the good standing fees. And so once we had that, we were already at the bank, and so they started accepting payments. So I don't know if that answers your question with regards to kind of the cost, which was about $500,000. That was not in dispute because that had been agreed to. I think what's in dispute is the belief that Ingamet did not receive the money before by the end of day on July 2nd, because they believe the end of day is 4:30 p.m. However, the general law, mining law, and the administrative law stipulates that the end of day is the end of day, 11:59. So they had all the capital in their bank account, and it was the matching of receipts that needed to be done, and they had the receipts. So then with regards to our legal counsel, we're working with a firm called the Studio Grau. They're a great legal firm. We did have to switch tax partway through. We didn't feel we were being properly represented, fully represented. We have 3 lawyers on our own team, and then we work with the Studio Grau, and they represent us both on the administrative side and the judicial side.
Okay, so if you go here and you attempt to make a payment, but you don't have the receipt or the document they need to accept that payment, they won't accept the payment. Is that right?
Yeah. So exactly. So every concession is its own bank account. Effectively, it's got a digital code, right? So Andrew has a concession, and it's number 123. So that concession 123 has every year you have to pay a good standing fee. Let's say it's $1,000 for your concession, and this particular year they said, oh, you also have to pay $100,000 for penalties. Well, those penalties aren't accurate, and in fact they're zero. So the bank can say, well, you can either pay on code 123, but you're gonna have to pay us $100,000 plus the $1,000. And Andrew says, well, wait a minute, I don't have a penalty on those. That's not acceptable. And why would I give you $100,000? That's not right, just because an accounting firm miscalculated. And I already know that the Ministry of Energy and Mines has accepted and acknowledged the fact. We're just waiting on this document. So the bank says, okay, bring this document back when you're ready. So on the day of, the final day, Andrew goes in to pay. Well, concession 123 still says 100,000 because this digital record hasn't been updated yet. So show us the document, the non-penalty resolution signed by the Director General of Mining at Ministry of Energy and Mines. So Andrew provides the document, and the teller says, okay, well, we'll put this under what's called a unique code, a general code. It's 999. So it won't be attached to concession 123, but I'll give you the receipt, and you have up to 48 hours after the deadline to deliver that receipt to the geologic group. And so Andrew goes and shows the receipts on the final day, and Ingamet accepts some of them, but not all of them. And then the next day, Andrew goes and delivers, receipt for concession 123, but it's in a general account, and Ingamet says, okay, thank you. And then later date, Ingamet says, we never got the money and you were late. That's effectively what happened.
Well, that sounds like routine Central and South America processes, which to many North Americans don't make a lot of sense. And certainly I know the complexities of dealing with some of these these businesses in some of the countries that I've dealt with, and I certainly have to shake my head at certain things, and it's certainly a detailed process that's you really is quite complex to get your head around. Well, let's move on here, Alex. So as the matter draws out, is management taking steps to keep costs reduced in an effort to delay further financings while you go through the process? What is being done here to optimize on both G&A and project expense at this point?
Yeah, so we've definitely cut costs in a number of areas. We don't want to blow out our capital structure because we need loads more capital to keep moving forward. So we've managed to cut costs in some of the non-salary G&A areas. We've cut costs in the salaried area in terms of trimming our team in country a bit just during this time. What we are going to focus on is, once we have our injunctions in place, is we will be putting out a preliminary economic assessment on the lithium project. And we're going to present investors with two scenarios. We're going to present them with we call it our base case scenario, which is effectively a mine plan based on the resource in both concessions. One of them that's impacted by this administrative process or issue that we're in, and the other one that's totally outside of that. But the deposit covers both of those concessions. And then we're going to provide investors also with an alternative case, as we call it. And the alternative case will only focus on the one concession that's completely unimpacted by the 32 that we're in the process of trying to fix right now. And so investors can look at that and say, here's my downside, here's my upside. And I think that this is, there's a disconnect in value here, so I think it's worth more. And I think what that'll help us do is help us get, have some more value recognized in the stock because of the disconnect between value, and then allow us to finance at not such dilutive levels to be able to continue to work. Because I think some of the important pieces of work that we should be doing, even while we try to resolve this, is we've still got an asset without them, and there's potential other value within the asset that we are not including in the PEA. And when I refer to that, what I'm really talking about is metallurgical work and processing work. So whether it's improvements to the process path, optimizing it for to drive lower OPEX, or whether it's byproducts, and we've got a series of potential byproducts that we're testing for now. Those are all things that add value. And so we're able to show people sort of a base case and an alternative case, and here's what it is, lithium only project. And then we can come back later and look at, there's some potential byproduct revenue here that can improve the economics over here. And we've also optimized the process, which has led us into identifying, some lower operating cost opportunities. And those are not huge capital spend items, but I like to, position them as they're great returns on your investment, and they de-risk the project at the same time.
And Alex, what is the expected capital consumption rate during 2020, assuming the concession issue will take most of the year to resolve? What can investors expect as far as the size and timing of the next capital raise? Can you speak a little bit to that?
Yeah, I think we'll take a staged approach to, we won't look to raise all the capital we need for 2020. Again, trying to be disciplined about not raising it all at one level. So I think we'll look at breaking the year up, and with our next raise, so the total year maybe somewhere around $6 million Canadian. But what we'll be looking at is what are the low cost, high ROI pieces of work that we can do on the project that make it a better project, because that will bring more value to the asset, which should get reflected ultimately in the share price, which means that when we go to raise for the balance of the year, it's at an incrementally higher level as well.
And to confirm, so right now, all work is essentially stopped as far as further exploration work, and the only thing that's ongoing right now is the economic study, the PEA for the Falciani lithium deposit. Is that correct?
And we have all exploration stopped for now. It's rainy season now. We're not going to mobilize in the rainy season. Even though we've drilled through it, it's much easier to mobilize in the dry season. We are doing metallurgical work on the byproduct potential right now. So, like I said, while we are intentionally not including any other byproducts in the PEA, and that's really to show that we have a lithium chemical project that stands on its own just for lithium. The metallurgical work program started it was around mid-October to look at the byproducts, and we've identified those potential byproducts in our flow sheet in the network program that we put out in July, and we'll also talk about them in the PEA as opportunities. And then hopefully looking Q1, we'll be able to communicate to the market. We've identified that we're able to extract and produce XYZ additional potential products.
And Alex, can you speak just a little bit more on the litigation front? You said there's kind of two options at this point to proceed forward, and those would be attempted together, I believe, if I understood that right. When will that decision be made to go after all options? Are you guys waiting on something, and can you give us kind of the short-term look on how long it's going to take to make that decision to go to full litigation?
Well, we're in that full litigation now. So in October, so basically what the system is set up to do is, while the administrative process the decision can remain open to change for 2 years, on the administrative side, you're forced to start a judicial process. And if you don't force that, then you basically forego your right to do it. And so we started that in October. And so we've got, I guess, judicially, we have two tracks. One is injunctions, which is part of it. Parallel to that is the judicial process, which started in October. Separate from that is the administrative process. So we can stop the judicial process at any time if we get positive change of opinion, but we have to pursue it regardless.
Can you speak to time frame? I know you mentioned it before, pretty wide window. Can you speak to any more time frame? Is this something you guys are confident that can be resolved relatively quickly, or do you really see this taking 3-4 years?
Our counsel's quite confident this will be resolved fairly quickly. Right now, I'm not in a position to, provide guidance to the market on how quickly we think it'll resolve itself. There's potentially 3 instances of 3 levels of court that this judicial process can go through. So you're dealing with how the system works in cases of administrative law like this is you have 3 layers of court, first instance court, and then you have a superior court, and then you have a Supreme Court. And the first instance of court is where we apply for the injunctions, and the injunctions are, like I said, things that freeze time and reverse everything that's happened as a temporary measure until the judicial process is seen out. Now, the judge that issues the injunctions is the same judge that oversees the case. And so I think that's important for investors to really watch for the tone and the language of what's within the injunctions themselves. Okay, because that's sort of, effectively what that means is an injunction. You can't just put an injunction in place without having a case. And a judge looks at applications for injunctions all the time. And what they want is, they don't want frivolous injunctions. They want ones that have merit. And so when you go to apply for an injunction, you have to provide all the evidence, all the arguments, etc., that support your reason for your injunction. So for us, for example, we've had to provide notarized copies of all the documents, certified copies of all the receipts, the timelines, everything, and presented our arguments. So when the judge sees that, then they issue a notice to Ministry of Energy and Mines and to Incomet, who's that geologic admin group I mentioned earlier. You have 10 days to respond to this. So that 10 days passed, and then they consider putting the injunctions in place. And they'll put them in the injunctions in place on the merit of the case. And so really important for investors to look for the language that's used in those injunctions and when they come. And then also, because that same judge oversees the first instance of the judicial case, I think they basically shared their opinion through issuing the injunctions on what they believe. From that point, if we're successful in that instance, Ministry of Energy and Mines and Incomet could appeal. I suspect they will appeal. I mean, it's sort of their legal, it's their job to do that. That's what they're there. Their legal departments are there to represent. And the Ministry of Energy and Mines legal department is totally separate and different than the legal department of Incomet, and that's really important to recognize. And then it would go to Superior Court, and that could take us several months as well. And so I guess where I'm optimistic is the facts speak for themselves. As you can imagine, we've had a lot of conversations with the Ministry of Energy and Mines. They've reviewed this legally. I think we're in a strong position there, but we still have to proceed through a judicial process that is equally as bureaucratic. So what I think is important for investors to keep in mind is watch for the injunctions, the language that will communicate the language of those injunctions, and then watch for the economic study in the lithium project. And you can look at two scenarios, and you can make your own decision based on the alternative case scenario, what kind of project it is, and where you think it's worth. And then you'll have the base case, which is your upside scenario. All these concessions get resolved, but regardless, you still have a project, and it's got an ability and a path to move forward. And it's probably in summary how I would watch for things over the next little while.
Well, I look forward to seeing how this goes, and hopefully there's a good, reasonable resolution that benefits both parties here. I think at the end of the day, the big picture points in one direction. Well, let's talk capital structure at this point, Alex. How many shares are out at this point, and what key backers remain on the shareholder roster?
Sure. So we have about 85, 86 million shares basic outstanding, about 101 fully diluted. So that was up from around 79 post that last financing we did. What was great to see in the last financing actually was the management and directors, insiders really stepped up to support the company. I think that's a statement to what we believe in, not only our confidence in kind of where things will go with the concessions, but also just the projects themselves. I think we've probably increased our management and director ownership in that last financing. We brought in some new capital out of Calgary, so it was traditional oil and gas money, high net worth investor that came in, and then of course our cornerstone shareholders at Haywood Securities are still big holders, and we have a couple of investors in Europe that actually participated and increased their position in the last financing as well. Generally speaking, our institutional shareholder ownership is roughly the same as what it was the last time we spoke, around 15%. We've got some strong high net worth investors out of the U.S. that I believe have actually been increasing their positions, and a couple of new people that look at the value disconnect of the two assets from where we're trading at today. I think really today in the world of lithium, we're arguably as down as far as anybody else is. We're really underperformed that space, and we've been thrown a concessions issue on top of that. So I think we're faring well relative to that lithium space. And uranium, we're probably underperforming the uranium peers, but not dramatically. So I think there's a lot of investors that are starting to watch. They're on the sidelines. Some of them want to see, some positive progress on the judicial side and a PEA. So they're actively watching for that, but they're just simply looking at a value opportunity that they already accept the macro picture of what's changing out there and the way in the consumer habits as we, transport ourselves. And that electric vehicles are coming regardless. It's just a question of when. And they're looking at the asset level value, and they're just seeing that, they add up to much more than where the company's trading at today. So you take a macro level view, you take into account that, the sentiment in lithium and uranium is pretty weak right now. But you buy into the fact that both or one of those is going to come back in favor in the next 12 months. And you sort of park the concession noise as is definitely priced in, and there's still a good size asset here to get behind, and that's what we're seeing people sort of wake up to and starting to position themselves ahead of any positive news.
Well, let's talk lithium prices for a moment. How are producers doing at current lithium prices. And Alex, assuming the feasibility is there, what prices for lithium, ballpark prices if you would, are needed to make those development decisions at Falciani?
I think a really important thing to bear in mind is there's no one lithium price. You don't get if you have a lithium carbonate, if you're battery grade, which means 99.5% and up, it's all about what's in the impurities. Those prices, it's all offtake and contract based, right? And you have lithium hydroxide and you have spodumene concentrate. Spodumene concentrate is what the Australian mines produce. So spodumene concentrate has come down from about $900 a ton to we just saw one of the big producers in Australia say that they were looking for about 500, just over $500 a ton in this quarter, which is a huge drop. If you look across to the South American lithium chemical projects, you have two versions. You have some companies that are only really able to produce a technical grade product, which is below 99.5%, and they're effectively dumping it wherever they can because there's not a lot of uptake for that, right? So that's like things like ceramics as an example. That's not the high growth market. That's basically grows at the rate of GDP. And then you have the high growth market, which last year, or this year I should say, the lithium, battery grade lithium chemicals that grew at nearly 20% this year, yet you've got prices down about 20%. So there's this paradox that's happening with demand up and prices down. So for investors, I think, unfortunately, the best source of information, if you don't have a subscription to one of these independent providers, is to look at the quarterly financials of the big producers like SQM, Albemarle. But don't look at their average price. See if you can find what they sold battery grade chemical products for versus technical grade. There's a big difference, like a couple of $1,000 to $3,000 per ton. So to get back to your question, I think what any of the development projects need today to get built is an incentive price of $10,000 per ton. We're sitting around $9,500 per ton for battery grade lithium carbonate today, based on contract prices of what we've seen. They remain higher in Japan and Korea, and China's lower. Japan and Korea are like the tier one battery manufacturers, and they're still somewhere between $10,000 and $14,000. Whereas China on the spot market is a lot less, but the spot's a very small part of the market. What we're looking to do with Falciani in our first instance with our PEA is, like I said, excluding byproducts, which we think will ultimately drive down the operating cost net of byproducts. So we're just looking at a lithium only case. We're in the lower half of the cost curve, which is a good place to be. Middle of the cost curve for 2025 is roughly $5,500 per ton. We have a lot of advantages to the location of the project, lower labor costs. We have access to in-country sourcing of raw materials, the consumables that we use for the project. We're scoping out a project that has a acid plant on site, which means it will, that acid plant through its process is able to recapture heat to create energy, and so it becomes a self-sufficient project effectively through that. And so we're able to incorporate various parts of engineering as well as working with local costs to create a very cost competitive project. And I think as importantly, one that's scalable because it's hard rock and not a brine, one that can scale up and produce a large quantity of battery grade lithium chemicals.
And assuming battery grade projects, Alex, what makes a hard, and you alluded to it for just a moment here, what makes a hard rock lithium deposit such as Falciani more economical and more viable over a salt basin type deposit?
There's probably a couple ways to answer that. So the cash operating costs of a brine project they're very competitive, right? Because it's a low operating cost intensity process path. Where you're relying on solar evaporation to slowly concentrate the brine solution down to a more lithium-rich solution. The challenging things of brines is it might take you 12 to 15 months to get to that point of evaporation. And along the way, you lose a bit of lithium every time. So your recoveries might be, your yield might be like 40%. The other thing is you're exposed to whatever the geochemical makeup is in that fluid, in the brine, which changes in time and space, right? So you design a process plant that is capable of dealing based on the design criteria when you start day one, but by year 10 or 15, the geochemical makeup of that brine is different than when you started out. So your process isn't necessarily optimized for that. And so you've got the long time to get to an end product, call it 16 months. And because of the exposure to the environmental factors, you're not as in control of the end product you produce, right? Garbage in, garbage out type scenario. So what brine projects tend to have is they have some of their product is technical grade and some of it is battery grade. And as I mentioned earlier, technical grade comes at a lot lower price point. For Falciani, it's a hard rock, so we're not having liquids and things moving around within that, right? So it's a static structure. It's fairly homogeneous. The lithium grade changes within that within our lithium-rich zone, but really between 3,000 and 4,000 ppm. That doesn't change much. And the other thing is we're in control of, we have a couple of factors to our benefit versus a brine in the sense that our process path is mechanical. And so we heat our leaching agent, which is sulfuric acid, which leaches from the rock, the mineralized material, lithium into a lithium sulfate solution. And then everything we do downstream of there is very similar to what the brines do after they've done 14, 15 months of evaporation. And so we have impurities removal, which is fairly standard, and we have mechanical evaporation versus solar because we've got a higher grade lithium rich sulfate solution. And then we precipitate a carbonate product out. And so we've got mechanical control and temperature to deal with. A brine project has ambient temperature, whatever it is at their project location. Whereas we have temperature and we're able to play with that delta of acidity as well as, or pH, I should say, as well as temperature. And those are factors that when you're dealing with chemical processing chemistry are great tools to have at your disposal to fine tune, your end product. And then I would add to that the consistency of the ore body is also a big benefit. So we're about 48 hours to an end product versus 16 months in a brine, and we have process control factors that I think are beneficial. And so all of those things taken into account should be able to produce a more predictable, consistent product. And I'll go back to the operating cost side. I think ultimately we're cost competitive because we've got, we'll have more predictability of battery grade versus a mix of battery and technical grade as the brines have. As well, if you look to Chile and Argentina, the cash cost may be around $3,000 per ton. But in Chile, once you bring in the progressive commission rates, you get up near $5,000 and $6,000 a ton. And in Argentina, you're sort of around 3,500 per ton, plus there's a royalty. And, I'm ignoring currency controls and other things where you get, a coupon gets taken off of your cash on the way in and out.
Now, Alex, at this point in the cycle, do you see that uranium has more upside room to run versus lithium? And as a result, how are you allocating capital to take advantage? Is it more towards lithium at this point for you?
I'm not sure I agree with that. Uranium has more upside room to run. I think it's interesting. Obviously two very different markets. Lithium, you've got a structural change in the way lithium chemicals are used that's being driven by a lot of capital, over, call it $500 billion of capital, changing the way we drive and the way we store power. And the forecast growth rate for lithium chemicals is 20% a year over the next 10 years. That's a very different marketplace and environment. That's a massive structural change. With uranium, we're not seeing a nuclear renaissance. We're not seeing, while we are seeing reactors being built, we're not seeing 20% growth a year. We are seeing projected growth. I think the World Nuclear Association's projected growth out to 2040, and we do have a supply gap that starts to appear. I think uranium, where it's different is that none of the producers are making money if they were to have to sell it contract at term prices today at $32, $33. They're not making any money. So there's no incentive for them to sign big contracts at those prices. There's no incentive for them to build new projects, and their existing projects are challenged because they're cash flow neutral or negative. So, uranium, I think, as I mentioned earlier, the equities tend to react very strongly to a shift in sentiment. So if we started to see contracts selling at $40 per ton, long-term contracts by the big producers, I think we could see the uranium equities react very violently to the upside, just because we've seen that done in the past. In lithium, the whole space is down in the junior explorer developer end. It's down about 80%. Meanwhile, demand is up. So that disconnect tells me that, we might not get to the euphoria of things might not go back to where they were in 2016, 17. However, being down 80% leaves a lot of room just to get back to a reasonable valuation relative to what is a major structural shift going on outside of the raw material space. So I think it's two different ways to look at it, but in terms of our capital today, so for uranium, what we really need to see, earlier this year, or late last year, we said we would do some optimization work on our project. We really need to see those regulations that we talked about in our last call come into get implemented in Peru. In our last time we spoke, I think I was cautious about being as optimistic as what the president had mentioned in 2018 as terms of the timeline. But I can say that on a couple of occasions recently, the Vice Minister of Energy and Mines, Augusta Cauty, has publicly stated that we are actively working on the regulations and we'll have them in place in the first half or second half of 2020. So that's positive because it's really, for me, it's the first time I've seen the ministry publicly on a couple of occasions put guidelines to that timing. I know they're actively having working groups. I know that through our various embassies in Peru that have pitched in or reviewed the drafts that they've signed off on those now. So the right things are happening, the right movement's happening, and when we see those regulations in place, that'll be a lot easier for us to dedicate capital towards the uranium project. Until then, as we already talked about earlier, we're sort of on a slower capital investment spend right now.
And Alex, what is the road forward for Falciani, assuming the concession issue is fully resolved tomorrow? Mm-hmm. What is the timeline? What is the anticipated study path? I know we've got PEAs coming, but what's the study path after that to get to a decision? And can you speak to offtake or joint venture as far as the route you might want to take? Can you share some thoughts with us on timeline, studies?
Yes, so the two next study stages are pre-feasibility study and definitive feasibility study, and then construction decision with project finance, etc. Roughly speaking, we're looking at about 15 months for pre-feasibility study, followed by about 20 months for feasibility and permitting. And we've allowed in that timeline for an overlap of permitting to go concurrent with the feasibility, and the project finance stage we would start well before the feasibility is done to bring possible parties in early. So if you called it 3 years to the point of construction decision, and that's about a 2-year construction cycle. So 5 years, assuming there's no hiccups. Concessions resolved tomorrow. Even if the concessions aren't resolved tomorrow, we would still focus on the alternative case project, right? Because that's still a buildable project. So we can ignore the concessions. I would say probably the typical delays that come in to advancing these projects is timeline to available capital, how quickly that comes. So let's focus on the next step, which is the pre-feasibility study. And the way we're looking at things right now is we will, to get to pre-feasibility study, there's a lot of capital needed to infill drill to take everything to reserve status. And then of course there's metallurgy and processing and the engineering part of it. But I would say the most capital intensive part is the infill drilling. So I think what we'll do for 2020 is we will focus on the metallurgy and processing side to de-risk that further. Not a lot of projects or not enough projects to focus on that early on. Those are lower capital investments, but they, at the end of the day, they are some of the biggest things that de-risk the project. I mean, our deposit's not going anywhere. It's fairly consistent. It's flat lying, it's. I think we've talked about this before. It's like a big coal seam, right? So it's a big bulk tonnage deposit. So we can push infill drilling down the road a little bit, focus on the processing, which will add, we think will add tremendous value for that investment on capital. In terms of things like offtake, what we're thinking about is, as a lithium project, you need to go through a qualification process. The qualification process of your product that you would produce can take 2 years. And then you get to an offtake. So generally you would start with like an MOU, and then you'd start the qualification process, and by the end of that you'd have an offtake. So we need to get to bench scale and then pilot scale testing for that in the processing, which is again another reason why we start on that now, right? Try to get ahead of the curve, start on the qualification process to lead to an offtake. One of the strategic visions we have, if you will, about our project is we have the ability to scope out a very green project, and we're going to, you'll start to hear us talking about trying to aim for being the greenest lithium project in the world. And why that's really important is, outside of it's the right thing to do to try to scope out a quote unquote green project, the end users of an electric vehicle, the consumers, it's part of a cultural shift, it's part of a thinking shift to reduce carbon footprint. And because of the stage we're at, we have the ability to incorporate some of those trade-offs in engineering now to look at various ways to reduce the footprint of our project. In the PEA, what we've already done is we've incorporated various things, for example, in our tailings, our waste disposal, we have dry stack tailings or filter tailings. That allows us to recycle up to 90% of the water that would otherwise be left in the tailings. So that's a great first step. As I mentioned earlier, we have a sulfuric acid plant at site. So what that does, it takes a bulk dry sulfur, converts it to sulfuric acid on a 1 ton of dry for 3 tons of acid ratio. And through that process, steam created we use in the processing after the leaching, and we also recapture the heat to produce enough energy. We produce about 18 megawatts. That'll power the entire plant and have excess power. And that's a very clean, it's scope from a Finnish company, it's a very clean power producer and very clean acid plant. And the reason why that thinking is also important is because there's guidelines, draft guidelines coming down in the EU right now, and the EU is in the process of building out their own battery supply chain. And they're looking for, ultimately they're going to look for full life cycle analysis from the raw material all the way down to that lithium getting in the battery, that lithium being in the car, and it'll apply to cobalt and it'll apply to nickel as well, et cetera, graphite and magnesium. And so for us to think ahead and try to get ahead of the curve, I think what we'll be able to do is we'll be part of scoping out a project that can be one of the greener lithium projects in the world, and with a low carbon footprint, and that'll ultimately mean that we have a very desirable product once we get through that qualification step. So get ahead of the curve because it's coming, and the car companies demand it, which they're going to put it on the battery manufacturers, they're going to put it on the cathode and anode processors, and eventually it's going to come to the raw materials providers. So rather than have, a lot of sunk costs in an operation that doesn't have a very low carbon footprint, we can get ahead of the curve and start to incorporate those things now. And the way the world's changing, there's an ability to do that without it being a higher economic cost, and you get all the benefits of being more kind of environmentally conscious at the end of the day.
Well, let's talk Makusani for a moment, Alex. Can you speak to that project as far as how you're setting the stage for potential discussions, offtake, et cetera, for when uranium prices are well underway? Can you speak to any efforts that are being done there backstage?
Yeah, so what we've, despite spending less capital on the project today, as we go to these various conferences, we make sure that we keep in touch with all of the traders. I think the realities of today are, we could sign an offtake with a trader today, but we're not going to get the price protections you would want, right? You want a floor, and you're willing to take a bit of a ceiling if the price moves massively, or at least a discount to that price if you get a floor. But the traders aren't really thinking that way yet. They're not quite there yet. So I think the offtake's there when we need it. It's just, to your point, let's wait until we start to see things move a bit. In terms of the project itself, we've been having, we, again, through conferences and direct outreach, have conversations with various other parties in the space, thinking about the best way to move the project forward. I think there's still work we can do that would improve the project. So recall that, so ignore of the 32 concessions, 6 of them impact the uranium resource. But putting that aside for now, we have 124 million pounds in resource, but only 70 million pounds make their way into the mine plan. And so, as we had talked about previously, but deferred that capital spending some time on looking at pre-concentration, because the data that we had from Cameco and the data that we looked after ourselves demonstrated the ability to pre-concentrate. And so what that would effectively mean is we could then relook at those other 50, 60 million pounds that are not part of the PEA mine plan as potentially economic, right? Because if we can take something that was below economic cutoff and increase your grade by 50 or 100% through pre-concentration, well, all of a sudden we've got a better project. And if we can look at the 70 million pounds and increase that grade by 50 or 100%, we've got a better project. So I think, if capital, with the regulations there, and assuming capital is not constrained as it is today for everyone, we would invest in some capital in improving the project. And again, they're not huge capital spends. It's test work to demonstrate that there's more value there. And I think through doing that process, that will also open up the doors to potential parties. Maybe we, joint venture, we spin out is another possibility that we've talked about before, separating the uranium and the lithium into 2 entities. But again, that didn't make sense, and we've always said it doesn't make sense until there's regulations in country and we see some kind of a stronger uranium market.
And how's the relationships with the utilities, Alex? Who's leading up that effort? And is there some preliminary discussions going on at that point, or are you guys just really waiting for things to be more definitive as far as the project, the country, and also the market?
I think so, a bit of both. So, again, these conferences are great avenues to touch base with some of the utilities. At the end of the day, we will go through a trader, right, for offtake. I think, and this was, remember, I think it was April. So Ted O'Connor and I went to the Fuel Cycle Conference in Miami, and we had an opportunity to chat with a few utility companies there. I think at that point in time, utilities were just waiting for 232 and to see what the outcome of that was. Realities are they need uranium, and some of them care about the projects, I guess, would probably be the best way, and they actually look into the technical and economic side of the projects, providing the uranium. Others just deal with the traders, basically. So we're not a Cameco because I have a problem. So I think our destiny is to work through a trader.
Can you speak a little bit on timing for Macusani, Alex? Obviously, it's more advanced than the lithium project. Assuming concession issues were resolved tomorrow and Peru implements their framework for uranium transport export, what would be the timing for Macusani?
Well, nice thing about Macusani is, as you pointed out, it's more advanced than Felchani. There's been a lot more work spent time and money spent on the project. There's a lot more test work that's been completed, and so the project's actually, we think that there's we could take that from from a PEA stage, do the optimization work, etc. Perhaps do a small update on the PEA, but effectively go bypass pre-feasibility and take it to feasibility. And so you'd be talking about infill drilling and incorporating, more of the just do some box leach testing, for example, or some pilot scale testing, and that would be roughly a 2-year timeline. We've almost wrapped up. I think by the end of this year, we will have completed the archaeological study. So remember, point of question for people was this cultural area of significance surrounding the Macusani project. So Felchani, lithium projects outside of that. We've completed an archaeological study across the whole area. So it's been an interaction between the Ministry of Culture and a professional archaeologist, because, bear in mind, an archaeological study has never been done up here. And that area of significance was put in place because of it was actually an agronomist that completed the study. And so, I think we're quite optimistic on the outcome that has effectively shown that, there's the only thing up here is some things that are worth salvaging, but they're being damaged by the natural environment. And that's a big part of that EIA, environmental impact assessment permitting process. So the archaeological study gets incorporated into that. And so we could see a 2-year, slightly overlapping period of on that path to feasibility and the permitting. So I think at the end of the day, pretty close to the lithium project in terms of development timeline, but maybe more like 2.5 years. So what I'm including in there is the overlapping of the EIA together with the feasibility study. And from there, it's a shorter build time. I believe in the PEA is 15 months. We think it could probably be a little bit less. But I think you've got a lot of different re-rating events or value events that happen between here and then, including potentially a better project with optimization work done. We would encourage exploration in and around, because again, and we touched on this in our first interview, the project came together as a series of concessions that were largely disconnected. Cameco had 30 million pounds, and that's not enough to move the needle for them. And Macusani Yellowcake had about 60 million pounds. And by the time everything got consolidated, we got to 124, but no one drilled in between the pits on that trend. So that kind of those targets are really low-hanging fruit that I think are worthy of spending a bit of exploration dollars on, because all of those could change the project for the better, and otherwise, we have the project as it is. Long way to answer your question, but call it 2.5 years.
Very well. Can you speak to a rough figure for all-in sustaining costs for Macusani under the anticipated production scenario that was outlined? I believe it was in the pre-feasibility study.
Yep. I think cash costs were around 17, and total costs would have come in around, it was just under 20. It was what, $19.50 or something. Call it $20.
And mergers and acquisition, Alex, has there been any interest with getting together with peers, specifically in the uranium space, to potentially unlock more value here and to further de-risk? Or do you feel like the company needs to advance the Macusani project further before those discussions can start? Or has there been some interest?
We've had those conversations because it's a large project. It's got an attractive cost profile. It's low capex. Peru gets mining. Where people get held up is definitely on, they're trying to understand the regulatory framework, right, which is in the process of happening. So if you walked into the Ministry of Energy and Mines office today, they would tell you, you don't need a law to mine uranium, but we need the regulations in place to be able to transport and export it. I think that 2020 will be, a good year. The ministry delivers on what they've guided people to recently. I think that will open up doors quite a bit. I think that there's not a lot of development projects out there with the kind of profile that our project has, that you've got the ability to grow, but you've also got, attractive, call it economic profile of a project. But showing that, that willingness of the government to put in place regulations for one project, I think is a huge, huge statement of being able to have the confidence in the permitting path for this project. And I think that's probably a bit of something that people are just sort of taking a bit of a wait and see. There's also no urgency to react today because the uranium price hasn't done anything. No one's truly building a project today. What we do, our job is to just make sure that we're on the radar of, various corporates, so that as we evolve, as we see the market come back a bit, that we do have other options outside of, just advancing it ourselves or spinning it out and advancing it with a similar team. Because, if you look at the development pipeline of projects, I really don't see a lot of projects out there that will work at the same levels that Macusani works at, cost profile wise. They're just not there. So that gives us a huge benefit, but we're in a waiting period, and we have a little bit of work cut out for us too, just to showcase. But I think those kicking the tire conversations become more meaningful as the contract prices come around and we start to see more certainty there. I think there'll be probably a scramble to find good development stage projects because nobody's been investing in them for 10 years.
Right, that certainly is the case. Alex, for potential investors who are on the sidelines, or even those investors who have some position now in Plateau, what would you say to them at this stage and at current price levels?
Well, current investors, I would say thank you for the ongoing support. We're dealing with obviously something, a tremendous challenge, but I think our ability to navigate this path this far is really a statement to the strength of our team. So from a current investor and then also from a prospective investor standpoint, I think it's it comes down to simple math, right? So you look at, if you wanted to take a worst case scenario, look for our alternative case PEA on a lithium project, and then look at the peer group. And the peer group trades between 10 and 25%, 30% of NAV. Okay, and then compare that to where we're trading at, and you'll see a disconnect in value. And then for the, and then your upside case is, well, if it's this, then we can take all of the uranium PEA economic NPV and all of the base case lithium project NPV, and arguably it should trade somewhere in around the median range of the peer group too, which is around 20% of NAV. And that is a significant disconnect from where we're trading at today.
Well, Alex, I want to take the time to certainly thank you for the update with Plateau. We continue to support the stock over here at SmithWeekly Research, and we're looking forward to having you back again soon to give us further updates as we progress.
Okay. Well, thank you very much, Andrew. Your pleasure.